If you don't understand finance, you don't understand the markets, that doesn't mean that that is always going to be the case. That is not your destiny.
Yeah.
You just have to start. We all want those really quick, easy tips that are going to make us a whole lot of money. Honestly, wealth does not happen overnight. It is something that you build brick by brick by brick.
All right, guys, welcome to Financial Freestyle on Yahoo Finance. Look, whether you're a professional on Wall Street, a retail investor, or just somebody looking to change their overall financial situation, there's always a first step that you got to take. And look no further, because I'm going to be speaking to some of the most influential people in the financial world and learning about their path to economic prosperity. And my guest today is none other than former Yahoo journalist and current editor-in-chief at ETF.com, Kristen Myers. Kristen, how you doing?
I'm good. How are you? This is what we're doing now? All right.
Listen, here's something that the world needs to understand. My first time ever stepping foot in Yahoo Finance's building is because of Kay Myers.
That's very true. I brought you on the show.
Yeah, so I think this is full circle moment. If you guys don't know, Kay Myers and I actually went to college together.
We did.
So this is my homie, and I think it's definitely full circle. But obviously, I know who you are, right? Your resume is extremely long, right? And so let's talk to the people.
Feel old.
No, that just means you're distinguished, and that means you're accomplished. But let's actually talk to the people and let the world know who's Kristen Myers.
All right. Well, I'm Kristen. I'm the editor-in-chief of ETF.com. And for those that are new to investing, that stands for Exchange Traded Fund. And ETFs are essentially a basket of assets that can really help you invest in pretty much any and everything. They are typically low cost. They have low expenses, and they're a really great way if you are a beginning investor or even someone who's actually a seasoned investor. They're a really great tool, honestly, to have in your financial portfolio.
Absolutely. One, right? The greatest investor. Me and him, we kind of 1A, 1B, but that's Warren Buffett. He's going to definitely let you know, get you an ETF, right? And so I think that this conversation is perfect for the overall audience, because something I speak on all the time is, look, you got to get you an ETF in your portfolio. Yep. And now, right, whether you're a crypto lover, we got crypto ETFs, right? So let's actually talk about overall portfolio strategy, right? Like, what component would you say ETF should make up of it, if you're able to say that?
Like a percentage?
Yeah.
I mean, honestly, they could be 100% of your portfolio. As I said, ETFs literally can be anything. You could honestly invest in equities and be purchasing ETFs. You can invest in gold or other commodities, oil, silver, for example. You can invest in cryptocurrency. You mentioned Bitcoin, Ethereum. They also have those spot ETFs for those two cryptos. They're talking about Solana ETFs now. So that's just really opening up the floodgates for other crypto currency ETFs. And then, of course, you can invest in like a blockchain ETF if you want to get into just the broader crypto space. So honestly, anything you want to invest in, you can invest in through an ETF. So you can literally construct your portfolio as in super high growth, high risk, etc. You can have your tech names all on one side. You can even buy leveraged ETFs. You can trade options with your ETFs. So you can kind of do that on one side. And then, considering the market's kind of shaky right now, we're looking at slowing economic growth. On the other end, you can kind of take a more defensive position in your portfolio and invest in things like utilities or consumer staples, the stuff that's not sexy, the stuff that's boring, your light bill, your water bill, all of that stuff that we know everyone needs and is going to continue to buy. You can also buy that in an ETF. So literally, ETFs can make up 100% of your portfolio.
Facts.
Just depends on what you want to buy.
I think we jumped into this thing in the deep end real quick. We didn't dip the toe in. The first question I asked is, who is Kristen Myers? And you went kind of professionally and talked about ETF.com.
Well, what do you want to know,
Well,
Ross?
well, listen, you took me to the Chicago Board of Options, CBOE, right? Or Mercantile Exchange, whatever you want to call it, right? That was the first time I've ever been there, and I'm from Chicago, and it was so dope because they literally rolled out the red carpet to you, and you rang the bell.
I did.
So let's even talk about how that came about.
Yeah, so I was in Chicago for your summit, but also to kind of visit the folks over at CBOE. Again, that's a Chicago Board Options Exchange. They are the biggest options exchange that exists out there. And for anyone that invests in terms of like volatility, the VIX VIX comes from CBOE. And essentially, we have a lot of ETF issuers that are listed on CBOE. So they said, hey, do you want to come ring the bell? And I said, I've never rung a bell on any exchange. So absolutely, I want to come ring the bell. And of course, I had to hit you up, say, do you want to come join me?
That was an amazing experience.
So it was so much fun. We got to see billions of dollars of trades happening right in front of our very eyes. And they got to all make bets on how many times I was going to ring the bell, which was 3 times, by the way. Everyone thought I was going to go for like 6 or 5 or something.
It was definitely like you'll get booed if you do it only once.
Yeah, because they want to get to trading. Those traders on the floor, they want to get to making money. So
right, you're now a full-fledged face of finance, right? But you didn't study it.
No.
How did you get started in finance as a whole?
Yeah, so when we were at Penn together, I actually was there to become a doctor. I really wanted to be a surgeon. I wanted to be a cardiothoracic surgeon, actually.
Don't even know what that is. So
They operate on hearts.
That means
I really wanted to be Christina Yang from Grey's Anatomy, for anyone out there who kind of watches that. And I was always good at math and science. And so I came to Penn. I figured I'm going to go in and I'm going to go study medicine. So, of course, my freshman year, I'm doing like the calc and, biology, all of that, molecular biology I was studying.
Wow.
Hated it. Absolutely hated it. I was so bored. I had to take a journalism class. As you know, Penn requires we take classes. So I took a journalism class because I thought, oh, this will be so easy check mark, fulfill my requirement. And I actually loved it. So then I thought, okay, I'll do journalism and I'll still go to med school. And I never went to med school. I just fell in love with doing journalism. And so after Penn, I decided to study journalism even further in Europe. I went abroad. Studied international journalism, and I figured, okay, I will do international journalism, do international politics, that type of thing. And then life happened. I moved to Norway, and Bloomberg called me. So I started working at Bloomberg, even though I thought, I don't know business like that. Even though I studied business journalism, I studied economics at Penn. This was all things that I had taken. I'd studied had several economics courses, but I thought, this is so boring. Finance is boring. I don't know anything about finance. I honestly, truthfully, and this is, I think, something that can resonate with everyone. I didn't want to do finance, 1, because I thought it was boring, but also 2, because I didn't understand it. I thought that everything to do with finance was super difficult, super hard to understand. I thought you literally had to have a degree in finance in order for you to report on it, to invest, to understand it. I truly just thought it was this big thing that I was never going to be able to grasp. But I mean, you're never going to be able to tell me that I can't do something. So I started at Bloomberg and I started reporting there, and things kind of started to make sense. And then when I came back to the United States, did a couple of reporting elsewhere. I was at Al Jazeera, I was at ABC, I was at NBC, and then Yahoo Finance called and I said, I'm not a markets reporter. And they said, you don't have to be a markets reporter. And then before I knew it, I'm talking about the markets every single day. Now, I don't mean to say that markets are easy, but I do want to encourage everyone who is listening or watching this. If you don't understand finance, you don't understand the markets, that doesn't mean that that is always going to be the case. That is not your destiny. You just have to start.
Absolutely.
You just have to start. And then once you start, and you start watching Yahoo Finance, for example, or you start reading articles, you start checking out places like ETF.com, things literally start to click for you.
Absolutely.
And things start to make sense.
I love the fact that you learned a lot through osmosis. So in your years of covering finance, what would you say some of the top things that you learned that the average person should know?
Okay, so first and foremost, you need to start investing today. And the biggest thing is to not get emotional about investing. Money is emotional, and I understand that.
Facts.
Money is literally how we do everything. It's how you pay your bills. It's how you feed your kids. It's how you feed yourself.
Status symbol too.
It's status symbol, and forget even having like the big things like a mortgage and all kids and all of that. Just simply for, like I'm single, for the single girlies out there, single. It's just literally how you go and hang out with your friends.
Yeah.
You can't go to a bar with no money. You can't go take a trip. And we know I'm on a plane like every other day. You can't go anywhere if you're broke. You have no money. And eventually at some point you also have to ask yourself, like, what am I working for? Why do I have money and what is it for? One day you're going to not want to work. So how are you going to retire? You are not going to be able to save your way into retirement. So I think the first thing that I absolutely learned is that you need to start investing now, because the amount of time that you have in the market is way more important than timing the market. And then the second lesson is, do not get emotional about investing. So many people say, I'm afraid to put in $50 into the market because I might lose $50. But then they go spend $50 on foolish stuff all the time.
2 drinks.
Forget even that. Stop buying clothes on Instagram. You took a gamble when you bought clothes on Shein. You might as well just take that money and put it in the market. You have a way better odds that you're going to have your money, you're going to get a return on that investment than when you bought those $3 shirt, t-shirt that's going to fall apart in the wash. So those are 2 really big lessons that I learned. And then the third thing that I would want to kind of implore everyone is really check where you're getting kind of like your financial information. I'm so tired of people saying that you should go buy a G-Wagon so that you can like save on taxes and write it off on your taxes. That's not exactly the best financial strategy. And I get it. We all want those really quick, easy tips that are going to make us a whole lot of money. But the third thing that I want to say is that honestly, wealth does not happen overnight. It is something that you build brick by brick by brick. And the more you learn and also the more money you get, those bricks get bigger. They do. You start building it faster, but it happens one step at a time.
I love that. You say you got to start today, right? I always tell people the best time to plant a tree was 20 years ago.
Yeah.
Second best time is today, right? And so I think, to your point, money is a very sensitive topic, and the average person try to run from it. They don't want to just face the reality. And I was talking about this earlier. It's like, look, some generational trauma that comes from money sometimes, and people don't realize they're carrying those insecurities with them the rest of their life. And it's like, you just got to start, right? And so I love that. Well, listen, guys, don't touch that dial. We're here, Financial Freestyle, with none other than the Kristen Myers. We'll be right back. All right, guys, welcome back to Financial Freestyle. It's your boy, Ross Mack, and I'm here with none other than the Kristen Myers. So, Kristen, what would you say is the one thing most people get wrong about ETFs?
I would say the main thing they get wrong is the cost, because when you buy a stock, you just buy a stock and the price is the price, right? But an ETF does have a cost associated with it, whether it's actively managed or if it's a passive ETF. There is going to be a cost. It's not a bill that you pay every week or every month, but it is something that comes out every year. But the cost is super, super low.
Super.
I mean, I'm talking about paying like $1 on every $1,000 type of low. Not every ETF is that inexpensive. There are some more expensive ETFs. But I would say that's like the number one thing that I think people get wrong. They think, oh, it's pretty expensive. And then the other 2 things that I would say people get wrong too, people think it's a mutual fund, and they hear mutual fund and they think, that's my grandfather's investment. And that's true. Mutual funds are their grandparents' investment, but ETFs are actually way more fun and exciting than mutual funds, and they are not the same at all. You know, same but different. They are traded like a stock, can buy them multiple times a day, don't have to just buy it once a day. So there are differences. And then the other mistake I would say is that people don't really investigate enough what's in their ETF, because ETFs can hold a lot of different things inside them. So ETF like SPY, for example, that's a sector spider S&P 500 ETF. That has the S&P 500 in it. The fund holds all of those companies, and they allocate percentage-wise based on how the fund wants to allocate. So it might have 8% of this company in there and only 2% of another company in there. But I think people have a fundamental misunderstanding what's inside their ETF. They just hear names and they think, oh, that's really cool and that's good. But then they don't bother to ask what it is they're buying.
So I like people to start with an idea, right? The very first investment I tell a person to buy is the S&P 500, whether it is SPY or VOO, kind of like Vanguard, because I look at expense ratio. Slightly cheaper
it's a great
than
way
SPY,
to look at
right?
that.
So that's one thing when she talked about that, right? There is an expense, but the expense is relatively low, but that is the one thing that, you know, can over 30 years can be the difference in several thousands of dollars just based on what you're paying someone to actually manage that. So I always look at expense ratio and just see which one is cheaper relative, assuming they kind of got the exact same holdings, right? But I like ETF.com because you could start with an idea and you don't even know what it is.
You could literally go in and type in NVIDIA. We'll show you literally all the ETFs that have NVIDIA inside of it, and we'll rank it from the funds that have the most NVIDIA to the least amount of NVIDIA inside of it. And you can literally make decisions that way. And then if you have 2 funds or 3 funds that you're looking at, so you were just talking about broad market funds, right? Like SPY or VOO, you've got IVV, you got VTI. You could literally compare all of them.
Absolutely.
So then you could see the cost, you could see the performance, and then you could see how they've constructed each of the funds. Because even though they're all invested in the entire S&P 500, right? They don't allocate every company the same. So one fund might say, we want to put Amazon is 10% of this fund, or we only want to have Meta be 2% of this fund.
Yeah.
That's when you start to notice a little bit of differences, and you start to say to yourself, okay, I don't want to have this much exposure to NVIDIA, or I want to have more exposure to industrials inside of my fund. You can start making decisions that way.
So now, would you say there are any other parameters a young investor should probably look at as well
When it
within
comes
that?
to an ETF.
Yeah.
So definitely look at the holdings, definitely look at the cost, so the PE, the PE ratio, looking at the expenses. I would also take a look at the AUM. And that's assets under management. That's not necessarily the biggest thing that you should look for, but I mean, if you look at one fund and it's got 20 billion assets under management and another fund only has 10 million, clearly way more people are investing in one fund over another, and that can be a pretty decent indicator.
Yeah, and in that exact example, right, these funds are getting inflows and outflows daily. So in the event that $20 million AUM ETF is getting outflows, well, chances are they're probably realizing those losses and they're selling, and you might not want to be in that one. So that's interesting.
Yeah, so following the crowd is not always the best thing that everyone should do, but it's also not the worst, right?
And you know what I love about what you just gave, because I love following the crowd of the people that are smarter than us. So when I tell people about investing, one, what is investing, right? You get the smartest CEOs working for you, right? That's what a stock is. But when it comes to looking at companies that already have their ETFs and their mutual funds, I like to work backwards sometimes. So I will see what exactly, if this stock isn't owned by BlackRock, Fidelity, Vanguard.
And remember who BlackRock is. They are the biggest asset manager in the world. So why do I need to compete with BlackRock?
Well, they're $1 trillion now, right?
Yeah.
So it makes sense to say, when you're following the crowd, and actually, I want to do what the people that are smarter than me are doing. And so I love the fact that you say you can leverage ETF.com to just say, okay, look, I definitely want to buy NVIDIA, right? Oh, who owns NVIDIA, right? So you can literally go to Yahoo Finance and put in NVIDIA, the actual stock, and see who the top holders are. And you'll see it's the Vanguards, the BlackRocks, et cetera. But then also, kind of reverse engineering, you could go to ETF.com and just put that in and actually see what other ETFs are owning that. So I thought that was dope.
Yeah.
I must say. So now, right, as we get ready to kind of conclude, what advice would you give to younger Kristen when it came to investing? And then maybe professionally as well.
I made so many financial mistakes.
What was your biggest?
Life.
Let's hear it.
Oh, I've got 2 big
This is Dr. Phil.
I've got 2 really big ones. Okay, 1, credit card debt. At one point in time, I got my second credit card, and my first credit card was like my baby credit card from college. My mom had gone in and slashed my credit limit. At the time, I was mad, but looking back, it was probably a good thing. She did that right when I went to Penn. But then when I got my first real grown-up credit card, I was like, I'm out here about to be spending. And I spent, and I spent, and I spent. And I had a good job. And I was like, I can pay this off. Until it ballooned to so large. And I was like, how am I going to pay this off? So that was my first thing. Like, really try to keep that debt under control. But if you do get in debt, and this is a big overarching piece of advice for you financially, but also like life advice as well, give yourself grace. We all make mistakes. You're going to make mistakes financially. You are. If you have been blessed with the longevity of life, you will make a financial mistake and you will make another and another
Absolutely.
and another. So give yourself grace, because you are going to, again, if you have that time, you're going to have the ability to make it up. So that was one, racking up credit card debt. Second mistake, leaving money on the table. For most Americans, and I am no different, my primary source of income is going to be my 9-to-5 job.
Absolutely.
Now, everyone needs to think of their 9-to-5 job as the way to leverage themselves into wealth and to jumpstart themselves into wealth, instead of looking at their 9-to-5 as their wealth maker. So you need to be taking the money you make in your 9-to-5 job and investing it so that you can grow that into wealth, right? Now, the reality is, it's not just your salary that's the income that you're making. It's also your stock options that you have. It's your bonuses. And the one thing that I did, not the one thing, I did this twice actually. I left a job right before I was going to be fully vested in my 401k. I did it at Yahoo actually. I left Yahoo right before I was going to be fully vested.
Wow.
So literally, if I'm thinking about it, there's probably like an extra $100,000, if I was to roughly say at least $75,000 that I have just left behind. And that hurts, because I can think of so much I would do with that $75,000 in my investment portfolio
that's real money
right now. So
that's real money, by the way.
I would definitely suggest to people, when you are calculating your benefits, you're looking at your 401k and you're going to be fully vested, things like that, really start to ask yourself some questions. Do I need to leave in August? Can I leave in January?
That's interesting.
Or if you are going to leave and you know you're going to leave that money on the table, somebody's got to make it up.
They got to
So
pay
if
you.
that new job really wants you, then
You got to pay that.
they got to pay up then to make up that loss. Always make sure you are asking yourself, in any move that you make, do I have a financial loss here? And make sure you're not the one with the financial loss. Make someone else pay for that loss. Another company, another employer. Make someone else pay for that loss. Because when you start to think about all the years that you go to work, you start to think of all the money that's just kind of flying out behind you, just falling out of your bag, just flying out behind you. And when you get to the end of your life, or you got kids, you're going to think about all that money that you left behind.
So we did the money advice. Right before we wrap, what would you say the career advice is?
Someone out there right now is half as good as you and is going quite confidently into either interviewing for the role that you want, or is in the role that you would like to have and doing it half as well as you would. I say that to say that there's a lot of mediocre people out there that have the boldness and the audacity of confidence.
Facts.
And so it might as well be you.
I love that.
So when it comes to any job that you want, salary, time to do salary negotiations, I want you to start thinking of yourself as a mediocre but incredibly confident person. And then go do what they would do. Because honestly, those people have zero shame and zero self-awareness that they're not that great. And they're going out there and doing it. They are right now. So why can't it be you?
Confidence is key.
I call it audacity, but I call it audacity, and I literally try to live my life like that. If I had nothing but audacity, what would I do?
I literally love that. Audacity. Confidence and audacity. People, that's it. That's all for this episode of Financial Freestyle. I really want to thank you guys for joining us. And more importantly, I really hope that we gave you guys some type of game, and that's actually going to help you on your journey to building financial wealth. Make sure you come back here next week for a new episode of Financial Freestyle. I want to give a special thanks to none other than the lovely Kristen Myers. Thanks so much for being here.
Of course.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.